warahmatullahi wabarakatuh. My name is Mazura binti Jafar. Today I would like to present the topic of factor affecting Malaysia economic productivity, and I am to present the introduction and the problem statement. Alright. The study will portray an overview which associated on subtopic of historical studies as well as economic development of Malaysia. The problem statement and research question are also set up in order to understand further on this study. In this chapter, we will be including the analysis together with some relevant theories. Malaysia has suffered a severe diminishing in GDP, gross domestic product, in 1998. Despite it was way back more than 2 decades, the effect still long lasting till today. It was incurred due to the Asian economic disaster which commenced from Thailand. The disaster was not initiated in Asia or specifically from Malaysia, but is due to the weakness of the United States economic venture. It has escalated into an extreme global monetary disaster and a deep anticipation as the alternative global as well as toward the international recession through the late 2008. Understandable if Malaysia, being a small, open and export dependent economy, has not been really relinquished from this external shock. This great shock was initiated to Malaysia economic ecosystem in the fourth quarter of 2008. Bank Negara Malaysia (BNM) had been forced to supply the incentive to regulate the financial quarter, unduly affecting the inventory market. This understandable, consistent cash flow is a key factor in economic growth. This is because a slow and inconsistent cash flow, it will be resulting in a slowdown in economic growth. As we can witness today, the whole world is facing the outbreak of COVID-19 pandemics. In order to mitigate the issue, movement of control order is implemented in order to fight the outbreak. However, this action was given a major impact on the country's economic growth as the cash flow was disrupted. Okay, let's move to the problem statement. Malaysia is currently facing economic difficulties and slowdown in the rate of GDP as an effect of the financial crisis as well as the pandemic COVID-19 crisis. Negative impact on all of the economic sectors such as manufacturing, services, mining, construction, agriculture as well as quarrying and economic activities do not contributing a significant revenue to Malaysian gross domestic product or GDP. For example, the sector of oil and gas contributing about 35% of the Malaysian government revenue. Therefore, if the oil and gas price are low really, it will be affect the Malaysian economic growth. After the 2009 global financial crisis, Malaysia's annual gross domestic product, which is GDP growth, has never declined below the level of 4.3% in 2019, reported by other previous research for Wong 2020. Poor development as low growth was due to supply issue in the commodity market and the reduction in public spending activities by Samsha 2020. According to DOSM, also the output from the factory that portrays the Malaysian Industrial Production Index (IPI) will sharply fall in March 2020, which is 4.9% from 12 months. This was formerly caused to reduce in all three sections of the index. Weakened IPI numbers in Malaysia had direct cause on the economic growth of Malaysia. Weaker GDP growth may experience if the IPI remain weak in the coming terms. It was studied by the previous research Ahmad 2019. GEMIT 2020 and have been reported that an average of 11% decline of FDI in Malaysia between 2019 and 2016 was recorded. Foreign funding in manufacturing was mainly contributed by China and Indonesia as the biggest shareholder, worth estimated 13.9 billion in 2018. Due to the investor is seeking for the securities on their assets, FDI in Malaysia has declined as the all their investors will invest all their money in safe haven assets amid to the uncertainty in the world market, Yvonne said 2019. Thus, it is clear that the decline in FDI will have a negative impact of the growth of the Malaysian economy during the global financial crisis. The stock market in Bursa Malaysia is also weakened as the exchange rate Malaysia ringgit differ greatly from the US dollar in early 2018 where it was traded RM 3.86. The benchmark FTSE Bursa Malaysia KLSI has fallen by more than 10% in 2019 compared to only 5% of neighboring Singaporean and 3% in Indonesia. The decline has severely affecting the financial industry and led to a further fall in stocks returns. Thus, the role of the stock market in Malaysia sector is very important. Unemployment is one of the main issues of afflicting the country, where the unemployment rate remains at 3.3%, which reported by DOSM Bulletin in January 2019. The latest report of labour market explained that the unemployment rate increased to 3.9% in March, and that rate may not be exactly accurate due to it does not include those staff who get unpaid leave or citizens who are not seeking for jobs during the implementation of the MCO, report by Ling 2020. Since 1998, poverty rates are expected to increase as the global economy experienced a tremendous recession in GDP per capita, report by Kirat 2020. Together with huge economic retrenchment, the COVID-19 pandemic does have a large effect, and poverty in the vicinity with 24 million fewer citizens escaping poverty in 2020 under the base case scenario than was forecasted in the pre-COVID-19 projection by Firas 2020. The GDP growth forecast was lowered by World Bank Malaysia to negative 0.1% due to the uncertain causes from huge disruption to economic growth on the COVID-19 pandemic crisis. Aruna 2020. According to the DOSM, Malaysia economic growth has been greatly reduced to 0.7% in the first quarter 2020 from 3.6% in the fourth quarter 2019. Foreign direct investment, FDI, tourism, commodity prices including palm oil, crude oil, as well as gas supply chain and are four main sectors that will be affected by the COVID-19 according to the World Bank's expectation, report by Firas 2020. Alright, next let's move to the research objective. The general objective of this study is to investigate the significant relationship between the economic indicator to GDP Malaysia from 1994 to 2019. And the specific objective is to examine the significant relationship between IPI, FDI, unemployment rate, poverty rate, stock market and GDP in Malaysia from 1994 to 2019. And the last one is to examine the most significant factors that affect the GDP in Malaysia from 1994 until 2019. The last part of mine is research objective. What is the research question? This project is set to answer the research question below, which is there any significant relationship between IPI, FDI, stock market, poverty rate and unemployment rate with the GDP in Malaysia? And last one is, which factor affect most toward GDP in Malaysia? Let's discuss further from next chapters.
Thank you, Mazura. Now it's my turn. My name is Muhammad Zuhaidi. So I will explain about the literature review. So how many studies we found? In total, we review 25 pieces of literature, and all of which were studied, and the literature review range from 2015 all the way down to, or should I say, all the way up to 2018. So first is relationship between GDP and IPI, which is Industrial Product Index. 5 studies are We collect from US, China, Nepal, Sri Lanka, and Saudi Arabia. From 5 study we get, all the result are significant. 3 significant positive, 2 significant negative relationship. Next, we go to relationship between GDP and stock market. The study is from Malaysia, Middle East, North Africa, Nigeria, Africa, and Indonesia. The study result summary, from 5 study we get, all the results are significant and all are positively relationship. Next is relationship between GDP and foreign direct market. The study is from Malaysia, Ghana, and Cambodia. From 5 study we get, all the results are significant and all are positive relationship. Next, relationship between GDP and poverty rate. The study is from Malaysia, Nigeria, Mexico, and Vietnam. From 5 study we get, all the results are significant. One is significant positive relationship. Other four significant negative relationship. Next, and the final relationship between GDP and unemployment rate. The study from Malaysia, Indonesia, Nigeria, Jordan, and China. From 5 study we get, 3 results are significant, 2 are not significant. From 3 results, 1 significant positive and 2 significant negative relationships. So that's all from me. Now, we go to salsabila for the next chapter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Today, I will present to you the research method. Okay, in this chapter, I will present to you the research design that we use, the data collection that we collect, the theoretical framework that we approach, and also the data analysis that we use. Okay, next about the research design. Okay, the study is to take a look the relationship between the independent variable, which are the IPI, Industrial Production Index, the stock market, the FDI, foreign direct investment, the poverty rate, and also the unemployment rate. Okay, in this finding, study opt to use quantitative research as require a series number of numerical records to play a unique lookup question. Okay, for the research design has 3 types, which are exploratory research, descriptive research, and causal show up. So you can see our data use quarterly GDP growth rate is used as a percentage. Stock market result, the data for the stock market index, IPI indicator for the IPI unit, GDP percentage act as the FDI proxy, rate of unemployment rate as a percentage indicator, and lastly, poverty rate use percentage value based on the Malaysia population. Okay, next for the theoretical framework. Okay, our framework, GDP and all the IV. Okay, GDP, okay, the DV, dependent variable is our GDP in Malaysia, and our IV, our title productivity economy in Malaysia, we list of the IV. Okay, the first IV is Industrial Production Index, IPI, stock market, foreign direct investment, FDI, poverty rate, and also unemployment rate. Okay, we refer all the result and all the research from the previous study from 2015 until the latest one. So we can see we select 5 journal for each IV to make the comparison between the result. I will explain to you normality test. Okay, this study used Jabera as the method a result. This specific method used to test the fact of the data being chosen is normally distributed or not. Okay, when normality test probabilities are greater than 0.05, the data is normal. In other words, the data are not normal when the probability are less than 0.05. Okay, for the descriptive statistic, okay, descriptive statistical analysis is the number of the observation needed to make observation on the basis of data obtained of the data analysis. The data are presented here. When the mean of the each variable data also included, and the normal divergence, square root are included. It also has the minimum and the maximum value of the data running, and also the autocorrelation. The common test to detect autocorrelation is a Durbin-Watson test or Brooks-Godfrey. Okay, where the value of the Durbin-Watson test varies between 0.8 and 2.5. In the Durbin-Watson test, there is no autocorrelation in the progress model. In order to be free of the autocorrelation problem, the p-value must be exceed 0.05 for the Brooks-Godfrey test. Okay, Ramsey reset test. Ramsey reset test is a non-linearity test used in general specification error checks. Ramsey suggests a general reset specification error test. Okay, general model represent the relationship between the independent variables and the dependent variables. Okay, for the heterogeneity test, p-value must be higher than 0.05 for both measures in the heterogeneity test. The heterogeneity test includes the quest for pattern in a regression plot of residuals. In this study, the white tests are being chosen to test for the conserved variance of error terms. And lastly, multi-collinear test. Okay, in this study, use the term variable to describe variable independently uses in forecasting or clarifying the dependency value of the variable. This does not mean that the different variables are statically independent. However, most independent variables are strongly like to be correlated.
Thank you, Salsabila, for passing baton to me. Assalamualaikum and a very good day to Dr. Haley and to fellow member on this floor. I am Badrul Hisham and I'm going to proceed to explain to all of you on our findings on Chapter 4 and Chapter 5. First, before we go further in our business, we are going to explain and portray to all audiences what is our objective of this research. Generally, we are going to investigate the significant relationship between the economic indicator to GDP Malaysia from the first quarter of 1994 until the fourth quarter of 2019. However, specifically, we are going to examine the significant relationship between IPI, FDI, unemployment rate, poverty rate, and stock market towards the GDP in Malaysia from the first quarter 1994 until fourth quarter of 2019. And among all the five independent variables that we have, which are most significant factors that will affect the GDP in Malaysia from the first quarter of 1994 until the fourth quarter of 2019. First, we're going to look into Jack-Barra test. According to the data in eViews, we could see that the value of mean is greater than the value of median. The shapes of the bell is positively skewed. The courtesy statistics have shown that the result have the normal bell curve, which is also known as mesochaotic. The probability value is lesser than significance level of 1%. Therefore, we reject the H null. Thus, we can conclude that the data are not normally distributed. Second, we're going to go into the descriptive analysis. According to the table generated in eView, the determined mean value were used for the average in comparisons. And before that, we are going to use the 101 data sets in our research. In addition to that, the median means the central point of the variables. Next, for the autocorrelation analysis, we are going to use the Durbin-Watson test. For the Durbin-Watson test, it is important to have p-value above our predetermined level of significance to be clear of the issue of autocorrelation. According to our Durbin-Watson test analysis, the status value is 1.37 to 909. The study's statistical significance is relatively average within the range of 1.5 to 2.5. Therefore, we can conclude that our sets of data are free from the autocorrelation problem. Fourth, we are going to go into the Ramsey reset test. For the Ramsey reset task is to examine whether the nonlinear combination of the fitted value explains the response of variables significantly at the predetermined 1% level of significance. According to our analysis, the p-value for all three statistics are greater than the 1%. Therefore, we fail to reject the null hypothesis, at which means the model is free from the misspecification problem. For the multicollinearity test, the results of the centered VIF, as per the table here, is a close than 10 and also, below than 10 and also close to 1. Therefore, we will not reject the null hypothesis. Due to this, we can conclude that the independent variable does not show serious collinearity. This has confirmed us that the t-test and f-test can be used without any doubt to make inference on the regression coefficient at the end of our research. 6. For the heteroscedasticity test, we could see that the value of ops r squared is 48.4816, and also the prop chi-square is 0.004. The probability of f statistic is 0.00016. In line with the previous test, we could compare the probability of prop chi-square with a p-value of statistic. These values are less than our significance level of 1%. Therefore, we do not reject the H1 and the heteroscedasticity is present in the model. Next, for the unit root test, for the first unit root test, we are going to go look into the augmented decay Fowler test. The p-value of an augmented decay Fowler as per figure on the left reveals that the test is very less than significant of level 1%. Hence, we can reject the null hypothesis and the data is stationary, which means it has a unit root. And the next unit root test we're going to go is Phillips-Perron test. According to the figure on the left shows that the economic growth, which is GDP, and the macroeconomics variable. The p-value obtained from the analysis is greater than significance level. The ADF statistic is higher than 1% of the critical values. Therefore, we will reject the null hypothesis, and at the same time, it's in fact that the data is non-stationary. Okay, before we go into our last analysis, we are going to share to our fellow audiences what is our questions of our research today. This research question is set to answer which is there any significant relationship between IPI, FDI, Malaysian stock market, poverty rate, and the unemployment rate with GDP in Malaysia? And among all these 5 independent variables, which factors affect most towards GDP in Malaysia? Therefore, in order to answer that question, we're going to go into the multiple linear regressions. According to our analysis in E-view, the probability in F statistic value is 0.000309, which is a good value. The R-squared value is more than significance level, indicating that this model is significant in explaining the dependent variable, which is GDP in Malaysia. In addition to that, the probability statistic that show the most significant relationship is IPI. The reason is that the value of IPI is 0.076, which is the closest with 1%. Therefore, IPI has a 99.24% significance in explaining the GDP in Malaysia. Thus, that is the end of our chapter 4. So for our chapter 5 today, I'm going to share to my fellow audiences what is our conclusions and recommendation. First, in order to have a strong IPI, which includes the manufacturing, mining sector, electricity sector, and many more, the most crucial yet important thing that should be implemented is Malaysian government could consider to improve the governance and to address any corruption case. Once bribery becomes pervasive, it will poison the country's potential to draw capital and to establish employment. Younger folks are apprehending in way much better than the others. The new poll of International Millennial has indicated that younger people have identified bribery jobs as due to the lack of training. This is the most crucial matter in their very own nations. Corruption in the underlying cause of so much inequality individual humans endure in their day-to-day life. Thus, we agree with any of these steps will continue to attract companies to invest across Malaysia or in turn build new employment and prospect for all people. Second, since education in manufacturing and production is very crucial to fuel the economic growth, the government of Malaysia are highly recommended to direct the funding to the high quality of schooling. This is to the fact that Malaysia is still behind our OECD level in mathematics, literacy, and scientific. In addition to that, geography and psychology inequalities exist throughout the world, and for certain classes, primarily low-skilled citizens, technology is destroying employment. Taking at the perspective of various nations, there is indeed a strong path ahead for Malaysia to follow its exceptional contribution to developing education. Investment decision in high levels of education will reduce skill inconsistencies, raise salaries, and encourage all Malaysians to make emerging technology workable. Third, or lastly, since consumer spending fuels the significant growth for Malaysian Industrial Production Index IPI, thus government should focus more on the solid employment. Malaysian officials could consider to improve female participation in the labor force. This is due to the fact that female participation is still low compared to men participation in the production sector. According to our research, we believe that increasing the employment rate of women workers to more than 56% could increase the GDP performance and increase the competitiveness in the Malaysian market greatly. This is the end of our presentation today. We deeply hope that our research would be able to be used by the society in order to improve the well-being of the citizen throughout the continent. This study is from the people to the people. Thank you for your time. Assalamualaikum. Peace be upon you.